So hi guys, I am CA Varshith Gowda, faculty for your accounts and financial management here in. So today in this video we'll be discussing about the latest RTP of May 2026. So let's try to understand it better. Okay. So let's start without any further ado. So first we have started with MCQs. Okay. So this MCQ is about borrowing cost. That is your AS 16. AS 16, okay. So let's start reading it. Year 1, a company purchased a land from its own funds and started construction on 2 towers on the land, okay. So they are constructing 2 towers. The company for the construction borrowed funds of 60 lakhs each for both the towers. So since they are constructing towers, one tower is how much? 60 lakhs. So since there are 2 towers, so total, how much they have borrowed? Total they have borrowed is 120 lakhs, 2 towers. The company is required to pay interest of 60,000 rupees annually for each loan. Aita, and the total interest comes to 1,20,000. No, each loan 60,000. Okay. During the first year, the company allotted the vacant area for parking purposes, which fetched revenue of 15,000 in year 1 only. So while doing the construction, what all the area we will take? No, some area will be, it will be free only, no, we will not utilize it. So that area was given as parking lot and that was fetching 15,000 rupees. Good, no? Now what to do about that 15,000 rupees? Anyone? It's an income to us, Of course, 15,000 rupees is income, but will we treat it as income? Why not? A16 this part comes under AS10. Okay, in AS10 what they'll tell, no, while you are constructing a PP, okay, whatever extra revenue you'll get, no, during the construction process, if it is related to the construction process, no, what you can do is you can reduce it from the cost of the asset. Iga building kattake 10 laksha anta ankoli, and this 15,000, if it is related to the construction process, I would have subtracted. Sir, what is related income? Maybe you have got scrap from the construction that you have sold. That what you would have done? Reduced it from cost of construction, minus 15,000 ಮಾಡ್ತಿದ್ವಿ. But is this parking related to construction? No. Jaga khali ide, parking ಹಾಕೊಳ್ಳಿ ಅಂತ ಹಾಕೊಂಡಿರೋದು. This is not related to construction. Hence, this income will go to P&L only. If it was related to construction, I would have subtracted it from cost of construction as per AS10. Okay. Tower 1 got ready at the end of year 2. So first tower is ready by the end of year 2. The company capitalized the same and started using the same for intended purposes. Okay. So first tower is over, year 2. So let's see the first MCQ. How much borrowing cost should be charged to P&L at the end of year 1? Aita, so illi. They are telling how much will go to P&L, and how much will be expensed anta. See, whatever is capitalized as per AS16 will not be expensed, correct? Now you tell me. In year 1 we are talking about. When did we start the construction? The company is required to pay 60,000. See, we have, during the first year, the company allotted the vacant area for parking. So we have started our construction from year 1 only, no? See, year 1 only we have started the construction. So tell me how much we will capitalize in first year. 2 loans we have taken. Is this specific borrowing or general borrowing? Specific borrowing only. Okay, from the beginning of the year I have taken for both also. And how much here did I pay in first year? 60. Total 1,20,000. Entire thing is eligible for capitalization, no? And all the 3 conditions under AS16 is satisfied. Correct. What are the 3 conditions? Expenditure incurragak start agbeku, borrowing cost incurragak start agbeku, and relevant work should have started. All the 3 is satisfied. Then what's the problem? Correct, no? That means entire 1,20,000 will be capitalized. That means how much would have gone to P&L? Zero, no? Because ella capitalize agake eligible ide andre capitalization is nil. Okay, so first one will be D. All of you understood? Let's go to the second one. How much borrowing cost is eligible for capitalization at the end of year 1? Tell me, expense ge zero hogide andre how much is eligible for capitalization? 1,20,000. Two towers we have, no? 2 towers. 60,000 into 2. Very clear. So answer is B. Next. How much borrowing cost should be charged to P&L at the end of year 3? We are talking about year 3 now. What has happened in year 3? By year 2, one tower is constructed. So one tower the construction has got over. So that we cannot capitalize, no? We have to stop it. Okay, the other tower is still going on. So out of 1,20,000, 60 I cannot touch. The remaining 60 I can capitalize. So therefore, answer should be A. Yeah, sorry. Answer is A, 60,000. All of you understood? Because by the end of year 2, one tower construction got over. So I will stop the capitalization. All of you? One more tower is still going on. That interest I have normally capitalized. Okay. Fourth one. How much borrowing cost is eligible for capitalization at the end of year 3? Easily you can tell. Year 3 still one tower is there, no? That is still, construction is still happening. So that 60,000 we can capitalize. Okay? Very simple question. Correct, no? And first of all, construction of tower is a qualifying asset. Yes, no doubt about it. It takes substantial period of time, that is 12 months to get ready. Whatever takes substantial period of time to get ready, that is qualifying asset. So yes. So that's about your first MCQ. Let's go to the second one. Suraj Limited acquires machinery on lease from Chand Limited. Now this is my favorite question from entire May 2026 RTP. Entire May 2026 RTP, this is the favorite question. Okay, focus. Your AS19 should be good. Suraj Limited acquires machinery on lease from Chand Limited on April 1, 2025 for 3 years. The economic life of machinery is also 3 years. So, you have to same. Economic life for 3 years. The lease period is also 3 years. So, you should get an idea that this is a what lease? Finance lease or operating lease? By that you have to understand that it is a finance lease. You remember our 5 conditions? There are 5 conditions. If any one of the condition is satisfied, it becomes finance lease. Correct, no? And one of that condition was this. If the lease period is a substantial part of the useful life of the asset, it becomes finance lease. So since simple, no? Asset life for 3 years. Lease period 3 years. And who is actually owning it? Lessee only, no? Technically, he is the one who is controlling. Correct, no? That's why this is classified under finance lease. Anyways, once you'll understand. And the fair value of the machinery is 2,50,000. Fair value. And today if you have to purchase the machinery, how much you have to pay? 2,50,000. And the guaranteed residual value is 2,000 and the GRV 2,000. Okay. As per the lease agreement, the lessee is required to pay 1 lakh per year from April 1, 2025. So 1 lakh. The lessee has guaranteed a residual value of 20,000. See, they are telling GRV for lesser is how much? 20,000. GRV of the lesser is 20,000. GRV from the lessee point of view is 2,000. Andre, how much as, please, you have to understand this difference. How much, you remember GRV, UGRV from AS19, correct? Guaranteed residual value, unguaranteed residual value. How much has lessee guaranteed the lessor? It's 2,000. Our lessee has told that no matter what, I will guarantee you 2,000 rupees residual value. That is residual value guaranteed by the lessee. Lessor has how much GRV on the same asset? 20. Sir, how the hell is it possible? Lessee has guaranteed only 2. How come you are telling from lesser point of view it is 20? Please understand, if you go to the definition, no. It is not GRV and it's not only guaranteed by lessee, it can be guaranteed by any third party also. Maybe because of that lessor has a higher GRV. So GRV for lessor is 20, GRV of lessee is 2000. That is one thing that you have to keep in mind. However, lessor estimates that it would have a value of 5,000 only after 3 years. Adu biscuit. Adra value avag enaru irli. It doesn't matter. Okay. At what value the machinery would be recognized? Okay. Machinery would be recognized andre they are asking accounting in whose books? Lessor lessee. Machinery will be recognized in whose books? Since it's a finance lease, correct, no? Machinery will be recognized in lessee's books. So they are asking me entry in lessee. So okay, coming to the accounting part. Okay. Now, as per AS 19, lessee should record the asset. Asset at what value? If you remember, it is fair value or present value of MLPs, whichever is lower. Remember, this is the value at which you will record that asset. In our case, this asset is what? That machinery. Okay. We know fair value in the question. How much is the fair value of the asset? 2,50,000. Or present value of MLP. So what is MLP? Minimum lease payments. What all will come under MLP? Lease payments plus GRV. Lease payments plus GRV. Alva? So cash flows togona here. So year 1, 2, 3. So year 1, 2, 3. What are the cash flows? Because MLP is lease payments plus GRV. Lease payments, you know, it's 1 lakh every year. So 1 lakh, 1 lakh, 1 lakh. Okay. And one more is, we have to also take GRV. How much is GRV? Don't forget, we are doing it from lessee point of view. Lessee GRV, I know, 2000. Next, what I have to do? I have to bring these cash flows to present value. Correct. To bring it to present value, I need a rate. Correct. In the question, have they given rate? See, they have not given. Nowhere in the question they have given rate. What rate to use? Oh sir, question is only wrong. They have not given the rate. Allah. If you go to AS 19 again, if you remember what rate we have to use, and if you see, they had told us it is another IRR of the lessor or incremental borrowing rate of lessee. That is what they had told. See, first preference, the rate which you have to use is the IRR of the lease from the lessor point of view. Okay. If that is not there, you will take incremental borrowing rate of the lessee. That is the priority. Okay. However, they have not given us borrowing rate also. So that means we have to go for IRR. That means we have to find out IRR for this question and then use that rate to bring it to present value. Understanding? Now these are the cash flows. How to find out the IRR? Remember your FM. We will take two random rates. Then we will find out IRR. So let's start with 10%. If PVF is 10%, can you tell me the present value factors for 10%? 1 by 1.1, 0.90, next 0.826, next 0.751. This also third year only, so 0.751. One small thing. What did we tell here? To take IRR of the lessor, no? Please understand. I have to take IRR of the lessor. Whatever I've taken here as cash flows, no? These are the MLPs. These MLPs only I have to bring it to present value later by using the IRR that I will find out. But to find out IRR, I have to take cash flows of yardo lessor. So what I have to do? These cash flows I cannot take. This is for MLPs. Adu recognition of asset. Correct? So right now I cannot use it. I'll come back to this. We need lessor. From lessor point of view, what is the cash flow? Okay. Year 1, 2, 3, 3. So from lessor point of view, what all is the inflow for lessor? Every year he is getting 1 lakh. 1 lakh. 1 lakh. 1 lakh. Correct? What is the GRV of the lessor? 20. For lessor, the GRV was 20,000. You have to take GRV. If UGRV is there, that also you have to take. But here GRV is only greater component, so I am stopping at 20. UGRV ididre adu tagotidvi. Okay. UGRV is the unguaranteed. Now if they are told that the residual value of the machinery is 25 and guaranteed is 20, and they would have taken 5 also as UGRV. But here that is not the case. GRV itself is more. That's why I have taken GRV. UGRV illa. Now you take the 10% PVF at 10%. So 0.909, 0.826 and 0.7. 3 years alva. So multiply. It's 90,000. It's better take 4 digits. 0.9091, no? 1 by 1.1. 9091 826 7513. Ivaga. Okay, always better to take 4 digits. Okay, now multiply. So this is 90,000 910. Next 82,640. Next 75,130. And fourth one 15,000. Okay, this is the present value. We have to take the outflow also, no, to get the NPV. What is the outflow for the lessor to get all this inflow? What is the outflow? Lessor has got all this inflow, but what is the outflow for him? How much he would have paid? The fair value of the machinery, no? Fair value of the machinery is the purchase price of the machinery today. So that much he would have outflowed. Adike idella barta iradu. So how much is the outflow? It's 2,50,000. That is already happening at present value. So I'll put it as 1. So 2,50,000. So can you tell me what is the NPV? Now, if you take the total of that column, no, whatever you get, that itself is NPV. Correct? No, because what is NPV? PVCIF minus PVCOF. ಎಷ್ಟು ನೆಗೆಟಿವ್ 13. You subtracted 13,706. Now I want, what is IRR first of all? IRR is the rate at which PVCIF is equal to PVCOF. Alva? If PVCIF and PVCOF is equal, then NPV will be 0. So nange minus 13,706, I want that to become 0. Andre, I want this negative to become 0. Andre, it should increase or decrease? Increase. For this to increase, rate should also increase. So next rate which I'll try should be more. So I will go and try 15%. Okay, let's try it for 15%. Now, no, you should get a positive figure. Avagle NPV lies between, you remember, no, all our discussion. So PVF at 15%. So tell me, 1 no, 0.8695, 0.7561, 6575 and 0.6575. NPV. This is 2,50,000 only. Next, 86,950. Next one is 75,610. Next one is 65,750. And next one is 20,000 into 0.6575. Yes, sir? 13150. So what is your NPV now? Eight five. Okay. Now we have got a positive number. Now let's apply the IRR formula. What is the IRR formula? Remember, L plus NPVL minus NPV L minus NPV H into H minus L. Remember, all forgot, sir. So L is the lower rate. ಏನು lower rate ನಮ್ದು ಎರಡರಲ್ಲಿ 10%. Plus NPV lower rate ಏನು 30 lower NPV lower is 13706 divided by NPVL is again minus 13706 minus H ಬಂದ್ಬಿಟ್ಟು 8540. Okay. And H, what is the higher rate? 15%. Minus lower rate is 10%. So solve for it. 10%. Ideradu minus minus agate. So I'll keep it as positive. Because numerator is also negative. Denominator is also negative. I'll keep it positive. So 13706 divided by 13706 plus 8540. You can minus of minus adu plus agate. I mean, you have to add it. Eshtu? Correct? So 10% plus 13706 into 5 by 22246. How much? 13706 into 5 by 22246. Come on, India. Why? Helri. How much? 13706 into 5 divided by 22246. 3.08%. So your IRR is 13.08%. All of you understood till here? 13.08. This is the IRR of the lease from the point of view of lessor. This I will use to bring the MLPs to present value. Okay. So come here. PVF at 13.08%. This rate I can use to bring it to present value. The MLPs. What are the MLPs? 1 lakh, 1 lakh, 1 lakh, and GRV of the lessee is 2000. That is what I've taken. Come on, tell me the PVFs of this 1 by 1.08. 1308. 4 digits. Come on. 8843. Next. 7820. Now bring it to present value. This is 88430 and this is 78200 and this is 69160 and the last one is 2000 into 0.6916. 1383.2. So total, this is the present value of MLPs. This is the value at which, this or fair value, whichever, that is the value at which I have to recognize. $2,37,000. So present value of MLP is 2,37,173.2. So you have to recognize this asset at fair value or present value of MLP, whichever is lower. Which is lower? 2,37,173.2. Let's see whether we have this option here. 2,37,000. Ellaru idya? C. They have given approx, no? So the answer is, the answer should be C. 2,37,400. Crazy question and my favorite question. All of you understood, no? Whenever you are discounting the present value, the MLPs, you should discount it at what? IRR of the lesser or lessee's incremental borrowing rate. First preference IRR. Have they given the IRR? No. We have to literally find out the IRR of the lesser, like how we did, and use that rate to bring the MLPs to present value and record it at that value. All of you understood, no? Good. Let's go to the next part. Which of the following is not an example of cash and cash equivalent balances held by the entity that are not available for use? Which of the following is not an example? Okay. Balance in unpaid dividend account, balance in bank account as FD, earmarked bank balances for specific purpose, balance in bank account subject to legal. Guys, try. Which one? Which one is not cash and cash equivalent? See, balance in unpaid dividend account, if you remember schedule 3, I thought they have only told it's balance in unpaid dividend account. You know, no law. If you have not paid dividend, then you have to separately park it in a separate account. That is still your account balance, and as per schedule 3, we will disclose it separately only. So this is cash and cash equivalent only. Okay. Earmarked balances for specific purposes. If you remember schedule 3, this is also cash and cash equivalent. Balance in bank account subject to legal restriction. This is also cash and cash equivalent as per schedule 3. It was this. Balance in bank account as FD. Because FD for period more than 3 months can be investment and not cash and cash equivalent. So answer should be B. Okay. Answer is B. Because FD more than 3 months will become investments, no? Not cash and cash equivalents. Other things, if you remember schedule 3, everything is there very specifically. So let's go to the next. All of you understood, no? Fixed deposits can become investment if it is more than 3 months. Following is the example of research activities as per AS 26, which is recognized as an expense when it is incurred. You remember AS 26, research phase, development phase. Whatever is incurred in research phase will go to P&L, whatever is incurred in development will be capitalized. So tell me, which of the following is an example of research phase? So tell me. The design, construction and testing, the search for alternatives, the design of tools, jigs, models and dies, the design, construction and operation of a pilot plant that is not of a scale economically feasible. Very clearly it is option B. B, okay, tell me why. Research phase is acquiring the knowledge, and you are still acquiring the knowledge. Development phase is you have got one idea and you have started developing on that idea. Alva? Research phase alli innu idea ne yavdu anta hudukta idira. Development alli you took one idea and you are developing on that idea. See, in the second case what they are telling, the search for alternatives for materials, devices, products, processes, system, you are still searching for it. Hence, B will come under research phase. You are still testing the alternatives. You have not started to develop on an idea. But if you see A, the design, construction and testing of pre-production or pre-use prototypes, you have already started designing the prototype. Prototype andre model of the idea. That means you have an idea in your head now. That's why you have started to build prototype. So that goes to development phase. Tool, jigs, mold. Mold andre en gota? You know mold. Whatever you put, it will take the shape of that. If you have started to develop mold, that means what? Idea is already there. So that's development phase. Here also you have started with pilot plant. That means you are developing on an idea. That means you already have an idea. Hence B is the research phase. Okay, done. Then again the sixth question from framework. It is ditto there in our study material, but however once we will discuss. Same question you have in your study material. See, Giant Limited entered into a binding agreement with Tiny Limited to buy a custom made machine of 1 lakh. Binding agreement andre no. Binding andre, I have agreed to buy from Tiny. Binding agreement means I have to buy. Tomorrow if I don't buy, he can go to court. I have to buy 1 lakh at the end of 24-25. Before delivery of the machine, Giant Limited had to change its method of production. The new method will not require the machine ordered and it will be scrapped after delivery. The expected scrap value is nil. Now you have entered into purchase agreement with Tiny Limited. But later you came to know that whatever machine I have ordered, no, it's of no use to me. Nan use madakagala, waste. Okay. You are required to advise the accounting treatment. Now tell me what to do. The question is, should I have to purchase 1 lakh? Should I have to purchase that machinery? Hey, but it's of no use only now. Should I still purchase? Yes, because of the binding agreement. Okay. Now that I'm purchasing, even if I don't have any use, should I capitalize it as an asset? Why? Yes, no. Asset andre no. Asset, you can recognize something as an asset only if you have future economic benefits from the asset. Alva? Do you have any future economic benefits from this asset? No. Expense in the one day one economic benefit to illa. So it cannot be asset. So what you have to do? You have to expense it off. Okay. Whenever you pay 1 lakh, it is not asset account to bank. It is P&L account debit to bank. It's an expense. It cannot be an asset because there is no future economic benefits. That's what framework told. Okay. Applicability of accounting standards. I hope you know the applicability of accounting standards for non-company entities. It has changed. Now there is only 2 classification, MSME and non-MSME. Level 1, level 2, level 3, level 4 and all is not there. Okay. Now you remember what is the MSME? Conditions, 5 conditions. If any one of the conditions is breached, then it becomes non-MSME, large entity agbidutte. So MSME agakke which are the 5 conditions? It should not be listed. It should not be banking, insurance or finance company. Its turnover should not exceed 250 crores in the preceding year. Its borrowing should not exceed 50 crore at any time during the preceding financial year. And last one, it should not be holding or subsidiary of any of the 4 above, which I told. The 8 conditions, or if all the 5 are satisfied, then it is MSME. Okay, or else it becomes non-MSME. So, they have given one question. We have to tell whether this guy is MSME or non-MSME. Come on. See, Virat Traders is an unlisted partnership firm. And so you have to understand that he is a non-company entity. See, because if it's a company entity, then the classification is SMC and non-SMC. I thought had a turnover of 249.99 crores. 249. So yeah, Continuing. So, 5 conditions you remember, no? Now let's see. Virat Traders, an unlisted partnership firm, that means is a non-company entity, had a turnover of 249.99 crores during the financial year 23-24. See, all of you please understand, for 24-25, both turnover and borrowing criteria, I should see previous years only to see the applicability. Okay, so that's why we are seeing the criteria for applicability criteria for 24-25, and I'll be considering the numbers of 23-24. Okay, now in 23-24, turnover is how much? 249.99 crores. Correct? Has it exceeded 250 crores? No. That means is it an MSME? Yes. It is less than 250 crores turnover. So that condition is not breached. Good. Next. The borrowings of 25.01 crore during the financial year 23-24. So what was the borrowing limit? I told it should not exceed 50 crores, but here the borrowing is 25 crores. Has it breached? No. It is still an MSME. Further, they have told it is not a bank, financial institution or insurance company. Yes. Still it is a MSME because it should not be a bank, insurance or financial company. And also it is not a subsidiary of any other entity. So 5th condition also satisfied. First condition we don't know. They told it should not be listed. Is it listed, unlisted? Clearly in the first line they have told no, it is unlisted. So all the 5 conditions are satisfied. It's unlisted, turnover has not exceeded 250, borrowing has not exceeded 50 at any time during the previous year. Then it is not banking, finance or insurance, and it's not listed, and it's not even holding or subsidiary of any of the 4 above. So hence Virat Traders is an eligible MSME. Okay, all of you understood? If you're MSME, what is your benefit? For you, AS3, AS17, AS20 and AS24 is completely not applicable. Arthmainda? These 4 standards not applicable. Rest all applicable, partially or fully. Okay, that is one thing. And one more thing what you have to keep in mind is, I'm asking you, if you are classified as MSME for the first time via this criteria, then from 24-25 you are eligible. Okay, if you are already an existing company and last year you were in non-MSME and this year via this criteria if you have become MSME, then are you eligible to become MSME this year? No. If you are already an existing entity who was a non-MSME and now if you want to become MSME, 2 consecutive years you have to maintain the same MSME status. Then only you can take MSME. So here what is my assumption? That this Virat Traders guy is a new guy. That's why he is eligible for MSME this year. If he is not a new guy, if he was already in non-MSME, then for 2 consecutive years he should be a MSME. Then only he will be eligible. All of you clearly got it? Okay, let's go to the next question. Now cash flow statements. So cash flow statements, okay, with respect to this question, this is not it's not a new question that we have not solved. This exact same question is also there in our study material. So there's no point in us discussing this. We'll just go through the question, okay, come to other information. Dividend paid during the year, what will you do? Dividend paid during the year. Because they have asked us to prepare cash flow statement via indirect method. Indirect method always starts with profit. How to find out profit? First you'll go to reserves here. Aita, what is the movement in reserves? See, last year it was 10 lakhs. Now it has become 15 and the increase is 5. Further you have paid dividend alwa, that is also added back. Correct? No. So your total profit that you will consider is 8 lakhs to start with the cash flow statement. Did you understand? 5 lakhs alla, dividend paid is added back. So 5 plus 3. Sir, why is dividend paid added back? Because whenever dividend is given, no, it will be subtracted from reserves. Aita. So when we have to find out the correct profit, we have to add it back. So it's 5 plus 3, 8. And one more thing is dividend paid is a financing activity. So it will be shown as a outflow in financing activity. That is one thing you have to remember. Next. Depreciation charge during the year 20 lakh. What will you do? You have to add back non-cash expenses. So we will add back. Fresh debentures were issued on 1st April 24. So if you come to debentures here, see earlier it was 40, now it has become 50. Why it has become more? Because they have issued debentures. Which activity it is? Financing activity. So 10 lakhs is an inflow in financing activities. All of you understood? Okay. So what about the interest on debentures? What will you do? Interest on debentures has already gone to P&L, no? Correct? Because we follow accrual basis. So interest would have already gone. How much interest would have already gone? Can you tell me? See, debentures are issued at beginning only. So illi half full alla scene galilla. Half full andre, if the debentures were issued at the beginning of the year, then the debenture is outstanding for the entire year. So no problem. So how much interest would have gone to P&L on accrual basis? It is 50 lakhs into 8%. 50 lakhs into 8% andre? Ishtu, 4 lakhs, no? So what will you do? Any interest related expense is a financing activity related expense. So 4 lakhs you have to add it back. Then ultimately how much you have to subtract in the end? You have to subtract 2. Why? Because 4 was your liability, no? But here you are showing how much liability? 2. That means 2 you have, out of 4, 2 you have already paid. That's why remaining 2 balance is still coming. Alva? And you know, in financing activity we follow direct method. Anything which is actually paid will be shown as outflow. Alva? So how much will you add back? 4. Because on accrual basis 4 lakhs would have gone to P&L and ultimately you subtract 2. This is the same thing which we have done. We have this in your study material. So not a great question. So coming to AS4. Okay, my favorite standard again. Correct? No, you have to tell whether it's adjusting, non-adjusting, that one. While preparing the financial statements for the year ended 31st March, B Limited has come across the following events which took place after 31st March 2025. The financial statements of the company were approved by the Board of Directors on 30th May. So when are we approving the financial statements? On 30th May 2025. Hello. Directors are approving when? On 30th May 2025. So anything if it has happened before the approval, that we can adjust in the financial statements if it is an adjusting event. Okay. If it is a non-adjusting event, nothing you are supposed to do. Okay. You cannot adjust it in the financials. You can just disclose it in the notes to account. So let's see. We have to classify the following items as adjusting or non-adjusting. So first one, B Limited started negotiations with S Limited during 24-25 to acquire the consumer durables business for 400 lakhs. The deal was finalized on 20th April, that is after 31st March, year ending. And B Limited invested 275 lakhs before 30th May. Tell me. See, deal agiradu 20th April mele, that is after the end of the current year. Now the question is, can I adjust it? Can we? See, this is a confusion most of the students go through. See, adjusting event andre eno, conditions should be existing on the balance sheet date. Andre, see, please focus very simply. This one logic will help you for all your AS4, AS5. See, for something to be an adjusting event, conditions should exist on balance sheet date. Aita? See, please understand, whatever is supposed to happen has happened already at the end of the balance sheet date, but you did not know it. You came to know about it later. Okay, in this case you can adjust it. Avagella nadhogbutide. Andre avageno ide situation ide. You came to know about this information later. Adjust it. So generally we will adjust these estimates, because estimates avagene information irutte, we would have used that information to find out accounting estimates. Okay, later I'll come to know about the correct thing, I will adjust it. But tell me, will we apply the same rule for transactions? No. If transaction happens before the end of the year, you have to record it before the end of the year. If the transaction happens after the end of the year, you have to record after the end of the year, alva. If a transaction, say suppose one simple example, okay. Say suppose I am seller. On 31st March you had come to my shop. ಯು ಜಸ್ಟ್ ಸಾ ಆಲ್ ದ ಗುಡ್ಸ್ ಎಲ್ಲ ನೋಡಿ ಸೆಲೆಕ್ಟ್ ಮಾಡಿ ಇಟ್ಟಿದ್ದೀರಾ ಆಯ್ತಾ. ನೆಕ್ಸ್ಟ್ ಡೇ ಬಂದ್ಬಿಟ್ಟು ತಗೋತೀರಾ ಆನ್ 1st April. ಓಕೆ, ಟೆಲ್ ಮಿ, ಶುಡ್ ಐ ರೆಕಾರ್ಡ್ ದಿಸ್ ಟ್ರಾನ್ಸಾಕ್ಷನ್ ಆನ್ 1st April or 31st March? Now will you tell sir condition existed on the balance sheet date because you came on 31st March? Hey, no, for transactions it's not applicable. If transaction is happening on 1st April, you'll record it on 1st April only, no? If the transaction happens on 31st March, you'll record it on 31st March. Alva? Sir, then what is this adjusting event? Anything which has already happened, but you came to know about it later. Generally, estimates iruttalla, adu matra. All of you? So hence, here, when is the transaction of the purchase happening? Before the year, after the year in the first case? It is after the year. So transaction itself is happening after the year. So it's a non-adjusting event. Just because negotiation started doesn't mean it's a adjusting event. Transaction itself happened in next period. So it's a non-adjusting event. Okay. Coming to the next one. During the course of the audit for the year ended 31st March 25, the auditor discovered a fraud of 1,25,000 done by the accountant. The fraud was discovered on 20th April, but this guy was absconded on 29th March. Now tell me, adjusting or non-adjusting? It is 100% adjusting event. Yake? It has happened on 29th March only, this entire fraud. You came to know when? Later. If you came to know later, it's okay. Has it happened that day only? Yes. Did the conditions exist? Yes. This is a adjusting event. And even the fraud has happened when? There only, no? So if I'm considering fraud as a transaction, then that happened before the year only. So it's a adjusting event. I came to know late, it's okay. That's not a thing. However, it had happened. Third one. A fire engulfed the warehouse of B Limited on 30th April and destroyed the inventory 15 lakhs. On 31st March, I valued it as inventory. 13th April, ella hoge. So my question is, should I reduce that loss of inventory in this year financial statements only? Previous year is the question. Adjusting, non-adjusting? It is non-adjusting. When did the loss happen? Nimge 31st March benki denaru vasne banditena? But it pertains to next period. You record it in next year's financial statements. The question was, it is happening in 30th April and it pertains to which period? 25, 26 ಗೆ 25, 26 ಗೆ ರೆಕಾರ್ಡ್ ಮಾಡ್ಕೊಳ್ಳಿ. The question was 24, 25 ಗೆ ರೆಕಾರ್ಡ್ ಮಾಡ್ಕೋಬೇಕಾ ಅಂತ. No. It clearly happened in the next period, no? So it is recorded in next year. It's a non-adjusting event. Clear? Coming to AS7. See, they have told it is AS7. Aita. But the question is AS10. It's a mistake. Okay. It's okay, no need to correct and all. It's AS10 question. So let's start. AS10 andre PPE. Again, one of my second favorite questions from the May RTP 2026. So let's focus. This also, even the question has one small mistake, we'll correct it. So let's read the question. All of you, 100% attention. On 1st April 2024, Y Limited purchased an industrial plot of land for 50 lakhs for the purpose of constructing a new factory. So they've taken a land, okay. This cost of 50 lakhs included legal cost of 2,50,000 incurred for the purpose of acquisition of this plot. So 50 lakhs already includes legal cost. So should we remove it? Because it's a directly attributable expense, no, we have to add it. Good. So it's already included, don't do anything, just take 50 lakhs. The construction of the factory commenced on 1st May 2024. Okay, you took the land on 1st April, construction of the building has started on 1st May. Y Limited provides you with the following details of the costs incurred in relation to the above construction. Aitu. So idರಲ್ಲಿ ಯಾವ್ಯಾವ್ದು add ಮಾಡಬಹುದು, ಯಾವ್ಯಾವ್ದು add ಮಾಡಬಾರದು, you should tell me. Okay. Preparation and leveling of the land. It's a directly attributable, add it. Employee costs of construction workers. Of course, laborers, no, we have to add. But per month it is 58,000. I have to add how many months? So let's come to the end, okay? Andre ee question aadmele text ideyala adak banni. The construction of the factory was completed on 31st December. Okay. When did the construction start? 1st May. Andre May in the December vargo I have to pay. Correct? No? From May to December, how many months? 8 months. Alva? So I have to add how much? 58,000 into 8. How much? 4,64,000. Just write it down there. 4,64,000 is the labor. Okay. Next. Purchase of raw materials. Should I add it? Yes, it's a directly attributable. So add 42,48,000. Next. Cost of relocating the workers to new factory for work. AS10 has very, very clearly told that relocation costs cannot be capitalized. AS10 has clearly told. Relocation costs cannot be capitalized. So you cannot include 75,000. No. Cost of inaugural function. ಯಾಕಂದ್ರೆ ರಿಲೋಕೇಶನ್ ಮಾಡೋದ್ರಿಂದ ಏನೋ ಎಕನಾಮಿಕ್ ಬೆನಿಫಿಟ್ಸ್ ಇಲ್ಲ ಆಯ್ತಾ. ಬಿಟ್ರೆ ನೀವು ರಿಲೋಕೇಶನ್ ಮಾಡ್ಕೊಂಡೇ ಇರ್ತೀರಾ. ವಾಟ್ ಐ ವಿಲ್ ಅಲೋ ಯು ಟು ಆಡ್? ಇಸ್ ಇಟ್ ಆಡಿಂಗ್ ಎನಿ ಬೆನಿಫಿಟ್ ಟು ದ ಅಸೆಟ್? No. So the cost of relocation is upfront told by AS10. Don't capitalize. Next, cost of inaugural function. Will we add or not add? Do you remember our discussion Wonderla, right, Sudeep? What did we discuss that time? We cannot add it. Why? Because by that time asset is already ready to use. I can capitalize only those costs until the assets become ready to use. So inaugural function agak munchene the asset is ready to use. So cost of inaugural function cannot be added. You cannot add it. Next. Overhead costs incurred directly on the construction of the factory. This can be added. For how many months? 8 months. So 50,000 into 8, 4 lakhs. Next. Okay. Let's read the further part of the question. The construction of the factory was completed on 31st December 2024 and the production could commence on 1st February. Okay. Now my small question, okay, simply AS10 alva. 31st December ge construction complete agide. 1st February in the work start agide. Should the depreciation start from 31st December or 1st February? Now one more important point you have to understand. Depreciation starts as per accounts from whenever it is ready to use. Income tax put to use. Aita? As per accounting standards, ready to use. When was the asset ready to use? It was ready to use from 31st December only. So from that point only depreciation starts. Okay. The overall useful life of the factory building was estimated at 40 years from the date of completion. However, it was estimated that the roof would need to be replaced 20 years after the date of completion. So you understood? Building allee, for building the useful life is 40 and for the roof the useful life is 20. So which to use? Did you understand the question? Roof is part of the building only, no? Roof get 20 years, building get 40 years. Okay. Now whenever the useful life of two different components of a PPE are different, you have to do component accounting and they treat roof as a separate component and building as a separate component. Aita? So we'll do it. The cost of replacing the roof at current prices would be 25% of the total cost of the building. Whatever building you have no totally. Otherwise 25% is how much? Roof. 75% is building. Did you understand? Okay. The construction of the factory was partly financed by a loan of 56 lakhs raised from State Bank on India on 1st April 2024 at an interest rate of 9% per annum. During the period, why have they given this information? First of all, construction is a qualifying asset. Yes, that means whatever interest that you have paid, that can be capitalized. Is it? Yes, okay. So 9% is the interest. We have taken the loan on 1st April. During the period when the loan proceeds had been fully utilized to finance the construction, Y Limited earned an income of 50,000 from the temporary investment of the proceeds. What is that? You took the loan Aita, whatever loan money that was not utilized, no, what did you do? You had invested it somewhere, and that investment has got you income of 50. What to do about this 50,000? Hello. If it is a specific borrowing, then if you get any excess money by reinvesting the excess of the loan amount, that can be subtracted from the interest and the cost of capitalization in the. That means whatever interest you add no to the cost of the asset, this interest which you have got as income by employing this excess funds and the loan, that can be subtracted from the cost of the asset only. Did you understand? How much loan I have taken? 56 lakhs. Aita. Out of that, entire 56 lakhs, did I use it in the first day only? No. Some amount is unutilized. No, that I had invested somewhere. By investing somewhere, how much money I got? 50. Aita. If it is a specific borrowing, no, that income can be reduced from the interest and the remaining can be capitalized. Okay, we will subtract it as we have learned. Assume that all of the net finance costs need to be allocated to the cost of the factory and interest costs to be capitalized based on how many months period they have told. Interest to be capitalized for 8 months. Clear? Keep this thing in your mind, I'll tell you why. You are required to compute the carrying amount after charging depreciation of the factory in the books of Y Limited as per the relevant accounting standards. Understood? Now let's start. What all we are supposed to capitalize, tell me. First let's find out the total. First, keep your calci handy. We'll go to the answer, no? We'll directly see it there. First, industrial plot 50 lakhs. It should be added because land, correct. Next, preparation and leveling of land. It is related, we have added. Employment cost of construction, yes, for 8 months we have added because construction period is 8 months, 4 lakh 64. Raw materials, yes, we have added 42 lakh 48. Overhead costs, 4 lakh we have added. Then interest, so coming to the interest. So for how many months you are supposed to capitalize? 56 lakhs is the loan, into 9% is the rate, into, in the question they have only told, it is 8 months anta, but in the question answer they have done 9 months. And also you only see, when did we start the construction? We can capitalize the interest only from when? From the point when we have started the construction activity start agirbeku. When did the construction activity start? April. It started from April, no? See here. Construction started from see here. Construction. The construction of the factory commenced on 1st May. Correct, sorry. The construction of the factory commenced from 1st May. When did the construction got over? 31st December. So how many months? 8 months. So technically I have to capitalize for 8 only, but nonsense fellows, in the answer they have done it for 9 months. So it's a mistake. You can correct it off. Page number 31 now. So it's 56 lakhs into 9% into, please correct it, it is 8 months. Aita? Can you tell me what is the number if it is 8 months? 56 lakhs into 9% into 8 by 12. So yeah, so let's correct this. What is the number? ಯಾವ್ದು ಹೌದು ಹೌದು ನಾವು whatever interest we pay to the bank is for 9 months only, but whatever we can capitalize is only for 8 months. In a 1 month interest, what will happen? It will go to P&L as interest. Remaining 8 months will be capitalized, because for you to capitalize, no, construction should have started. That is one of the 3 conditions you have in AS 16. So how much is the correct interest? It's 56 lakhs into 9% into 8 by 12. How much you'll get? 3 lakh 36 ali minus 50. Why am I minusing 50? Because that is the temporary investment. Alva? A temporary investment should be subtracted if it is a specific borrowing. In our question, is this a specific borrowing? Yes, no. This is the loan that is taken for construction. So it comes to 2 lakh. So this should be 2 lakh 86,000. Aita? So what will be the total cost then? This will also change, no? To total cost enaito 50 lakh 51 lakh 60. So add everything. This will also change. This will also change. Total cost will be 1 crore 5 lakh 58,000. I've corrected it in my solutions. You can open that also. AS 10 nalva. See here. I've altered the solution and I've given it here. So total cost is 1 crore 5 lakh 58,000. This becomes 2 lakh 86,000. Clear? Now I have to find out depreciation. No? How to find out depreciation? Which method? We have to use SLM. For SLM we need what? Useful life. What is the useful life of the building? 40 years. But don't forget, building do 40, roof do 20. And how much is roof? 25%. Building is 75. So I'll take 1 lakh 1 crore 5 lakh 58,000 I will take. Out of that upfront I will minus how much? 50 lakhs. Can you tell me why I am minusing 50 lakhs? 50 lakhs was land, and on land there will be no depreciation because land is an appreciating asset. So please subtract 50 lakhs. So remaining is 55 lakh 58,000. Our 55 lakh 58,000 ali 75% is building. So what I have done? 75%. Okay, into 55 lakh 58 into 75% divided by what is the useful life for building? 40 years divided by 40. Sir, into 3 by 12 why you have done? Because when was the asset ready to use? It was ready to use by 31st December 2024. And I can give depreciation for Jan, Feb and March. 3 months aste depreciation kodbekagirodu. Because the construction got over on 31st December. From 31st December the asset is ready to use. Jan, Feb and March. All of you understood? 55 lakh 58 into 75% divided by 40 because building to 40. Now similarly for the roof, 50, it's not 44, it is what? It's 55 only. Okay. 55 lakh 58,000 into 25% is roof. Aita? So into 25%, what will you divide it by? The useful life is 20 years. So divided by 20. Again, it is for 3 months. So into 3 by 12. So your total depreciation is how much? Can you tell me? 26,053 plus 17,369. So total depreciation comes to 43,4 chew. Okay. So your total depreciation is 43,422. So cost minus depreciation. So carrying amount comes to 1 crore 5 lakh 14,578. All of you understood? You have to do component accounting. Correct? No? For the building, the life was 40 years, whereas for roof it was 20 years. So you have to separate it, take 40 years for building and 20 years for the roof. Alright? So let's go to the next question. Okay. AS4, AS10. Let's come to AS12. Government grants. Again, this is a similar question which we have already done before. But anyways, we'll discuss. ERA Limited installed plant and machinery costing 100 lakhs on 1st April 2023. So they've installed a plant and machinery. Cost is 100 lakhs. They received a government grant of 40% towards its cost. And the 100 lakhs, only 40 lakhs they received from government as a grant. Yes, Alva. So what to do? How to account for it? AS12 government grant for depreciable assets. We have two options to do the accounting. One thing is whatever grant you have got, you will reduce it from the cost of the asset, or one more way is you will transfer that grant amount to deferred government grant account. Correct? Two options we have. Let us see which option they have selected. The grant was credited to plant and machinery account. And then whatever grant they have received, they have reduced it from cost of plant and machinery. That means they are carrying this plant and machinery at what value? They are carrying it at 60 lakhs. 100 bandide. 100 was the plant and machinery, and whenever they have received the grant, they have reduced it. So it has become 60 lakhs. Okay. The life of the plant and machinery is 5 years and the residual value is 10 lakhs. The company charges depreciation on SLM. After 1 year, the company had to refund the grant to the extent of 25 lakhs on 1st April due to non-compliance with certain conditions. You are required to pass the necessary journal entries in the books of ERA Limited for the first 2 years. So what has happened later? Exactly. After 1 year, the company had to refund the grant. So how to do the refund accounting? Very simple, no? What did you do when you received the grant? You reduced the cost of the asset. Alva? Andre, you would have credited the plant and machinery account. Now when you are refunding, what will you do? Debit the plant and machinery account. Ashte, very simple accounting. Okay? So let's see how the accounting goes. So first what has happened? On 1st/4/2023, I have purchased the plant and machinery. Entry should be plant and machinery, then asset increasing debit to bank, asset decreasing credit, 100 lakhs, 100 lakhs. Then what did we do? We received the grant which we are reducing from plant and machinery only. So bank is an asset increasing debit, 40 lakhs to plant and machinery. We are reducing plant and machinery, no? So asset decreasing credit. Bank account debit to plant and machinery, 40, 40. Now the plant and machinery value became 60. Now tell me depreciation, because when is the refund happening? Refund is happening after 1 year. So for 1 year we would have given depreciation, no? Correct or wrong? Correct. How to calculate depreciation? SLM. So cost is now 100. No. 100 minus 40. Now it has become 60. 60 minus residual value is how much? Residual value is 10. 60 minus 10 divided by useful life should be 5 years. So it's 50 divided by 5. How much is the depreciation? So it is 10 lakhs per annum. So for 1 year I will give depreciation. So depreciation account is depreciation is an expense increasing debit, and whenever you give depreciation your plant and machinery will decrease. It's an asset decreasing credit. 10, 10. Since depreciation is an expense, we'll transfer depreciation to P&L account. So credit depreciation and debit P&L at the end of the year. You know, no, at the end of the year we transfer all the expense accounts to P&L. That is what they have done. Now what happened? Now on 1st April 2024, we have to refund the government grant. How much? 25 lakhs. So when you had received it, you had credited plant and machinery. Now that you are refunding it, now debit plant and machinery. Plant and machinery account debit to, why? You are debiting back. To bank, why? Because you are refunding, no money is going. Plant and machinery account debit to bank account 25 lakhs, 25 lakhs. Okay, now on the revised value you will calculate depreciation. What is the revised value? See, when you bought it, it was 100 minus 60 you did. It is, minus 40 you did. It became 60. Then for 1 year you gave depreciation. How much is that depreciation? Minus 10. And at the time of refund it has become 50. Now what did you do? You have refunded the grant, alva. So you have increased your plant and machinery by 25. Right now the carrying value has become 75. So now you have to do prospective. What is the cost? What is the asset now? 75. You consider cost as 75 and the remaining balance carrying amount, revised carrying amount, minus what is the scrap value? Scrap value was how much? 10, nah? How much is scrap value? It's 10, okay, alva? So 75 minus 10 divided by remaining life you have to take. Revised carrying amount minus scrap value by remaining. Out of 5, 1 is already gone now. So remaining is 4. So 65 divided by 4 is to 16.25 is the depreciation for the next year. All of you understood? It's revised carrying amount minus scrap value divided by the remaining useful life. Out of 5, 1 year is gone, remaining is 4. So therefore, again depreciation entry for 16.25, depreciation to plant and machinery, then that depreciation is transferred to P&L, 16.25. All of you understood? Clear? So let's go to the next question. So we have question from AS14 again. Whatever question we have got from AS14 is a replica question from your study material. It's okay. No new or no crazy adjustments. It's exactly same. Let's go through the question once and discuss whatever we know, okay? A Limited and B Limited were amalgamated on 31st March 25 to form a new company called AB Limited. So what? It is absorption, amalgamation. Remember our discussion? Is it absorption or amalgamation? Absorption is one company taking over another company. Alva? Amalgamation, two companies coming together to form a new company. So this is a amalgamation. So they have given two companies, A Limited, B Limited. So A Limited, B Limited, both are transferor companies, correct? And AB Limited is transferee company. Okay, done. So they've given the entire balance sheet, but you know what we'll do? We'll directly go for adjustments first. So first one, the authorized capital of AB Limited will be 100 lakhs equity shares of 10 each and 7.5, 9% redeemable. See, they have given authorized capital. Is it of any use? Is it of use or no use? Yeah, from the working point of view, it is of no use. But while preparing balance sheet, in notes to accounts, you have to give authorized capital information also as per schedule 3, remember? So for that information, you have to give this. AB Limited, now from here we have started. AB Limited will issue 4 equity shares for each equity share of A Limited. You remember what is purchase consideration? Anything that is given to equity shareholders and preference shareholders will be considered as purchase consideration. Correct, no? So how much they have given? For every 4 equity shares held by A Limited, we are giving, for every 1 equity shares of A Limited, we are giving 4 equity shares of AB Limited. And what is the issue price? 25. And AB Limited is issuing 5 equity shares for every share of B Limited and issue price 25. So, okay, next, preference. Preference shareholders of A Limited and B Limited are issued an equivalent number of 9% redeemable preference shares of 100 each of AB Limited at an issue price of 200. So what will you do here? Did you focus? Are issued an equivalent number of 9%. Andre, can you please tell me how much we have given for A Limited preference shareholders? Equivalent number. Andre first A Limited the preference shareholders estidaare, we'll see. See, for A Limited 324 lakhs and each share is 100. So 324 by 100 andre 3.24 lakh shares ಇದೆ, correct? Andre 3 lakh 24,000 shares are there in A Limited preference shares. How much we have given in AB Limited? How many preference shares we have given? They have told it is equivalent number. Andre we have issued what? 3 lakh 24,000 preference shares only. All of you understood? Correct? What is the wording they have used? See here, equivalent number. So 3,24,000 is the preference share that is there in A Limited, and that is the number of shares we have issued by AB Limited also. Now, while determining the purchase consideration, will you multiply it by 200 or 100? Issue price you have to consider, no? So you have to multiply it by 200. So that is one thing that you should know. What is this? 9% redeemable to existing it. Idalla. So here. See how many we have issued? 3,24,000 preference shares at rupees 200 each. Equivalent number. BL estiде, BLE 2,16,000 shares presently is there. We have given equivalent number 2,16,000 preference shares only and issue price 200. That is the purchase consideration. That is what you will consider in PC for the purpose of determining PC for year 14. Anyways, let's continue with the question. Next, fifth point. Existing 8% debenture holders of both the companies will get 2 9% redeemable preference shares of 100 each for 3 debentures held by them at a issue price of 150. So we are talking about whom? Debenture holders. Whatever we are giving for debenture holders, will that be considered as PC? No. Anything we have given for equity and preference, only that will be considered as PC. I thought debentures, we'll see how much we have given. For existing 8% debenture holders, they will get 2 9% redeemable preference shares of 100 each and issue price of 150 for every 3 debentures held by them. So tell me how much preference shares I am giving to them. See, let's come to debentures. How much debentures we have? 90 lakhs divided by 100. Andre, ಎಷ್ಟು debentures ಇರೋದು? So 90 lakh divided by 100 means how much? You have 90,000 debentures. Correct? For every 3 debentures, I am giving what? 2 preference shares. For every 3 debentures, I am giving 2 preference shares. So 90,000 divided by 3 into 2, it comes to. So I am giving 60,000 preference shares, and each preference share is valued at how much? See, issue price is 150. Always you have to consider issue price only. So 60,000 into 150. Okay, that means how much? How much worth I am giving? It is 15 into 6. 90 only should come now. 9 lakh. 90 and 90 lakh only. Okay. So understood how we did this? We had 90,000 debentures. For every 3 debentures we have given 2 preference shares. That means we have given 60,000 preference shares at an issue price of 150. So what we have given to debenture holders is 90 lakhs. Okay. Next. All current assets and current liabilities of A Limited and B Limited are taken over by AB Limited at book value except inventory, which is taken over at 4% lesser. The moment this 4% lesser will come, what should come in your mind? That is, what thing should come in your mind is, it is amalgamation in the nature of purchase and it is not amalgamation in the nature of merger. Yakeli? In amalgamation in the nature of merger, you have to take all the assets at book value only, but here you are taking assets at value other than book value. This is the proof that it is a amalgamation in the nature of purchase. Okay, we will consider it like that only. Then AB Limited will require to maintain investment allowance reserve for 3 years. Tell me, will the reserve come in amalgamation in the nature of purchase? No. In the nature of merger, reserves will also come. Assets, liabilities, reserves. All the 3 will come to transferee's balance sheet also. Correct? But in purchase, it will not come. But here they are telling you have to maintain the reserve. So what will we do? So what we'll do is, in reserves and surplus, I will get this reserve also. What is this reserve? Investment allowance reserve. So in transferor company, amalgamated balance sheet, what will I do? I will show investment allowance reserve, and below that only I will subtract. What will I subtract? Amalgamation adjustment reserve anta immediately will subtract it below it. Remember, because reserves will not come in purchase method. Reserves will come only in merger method. But since this is purchase method, I have to take this reserve immediately. Amalgamation adjustment reserve I have to subtract. All of you understood? So all these adjustments is already discussed. Same questions you have in your study material. No new thing. Okay. So A17 one question we have. Whether interest expense relating to overdrafts and other operating liabilities relating to a particular segment should be included in the segment expense or not. So simple question. Should you consider interest expense as a segment expense? Is the question. So if you see A17, no, they are very clearly told only the operating expenses and income should come. This is financing. So interest expense should not be treated as segment expense. Okay. Now, coming to AS24, again about discontinuing operations, same exact question we have it in our study material. Okay. Anyways, I will just read it. Same exact question we have, and they've asked the same exact question in multiple attempts also. Okay. So their question is, Arzu Limited is in the business of manufacturing of passenger cars and commercial vehicles. The company is working on a strategic plan to shift from the passenger car segment over the coming 5 years. However, no specific plan have been drawn up for sale of neither the division nor its assets. As part of its plan, it will reduce the production of passenger cars by 20% annually. It also plans to commence another new factory for the manufacture of commercial vehicles. So what we are supposed to do? You are required to comment if mere gradual phasing out in itself can be considered as discontinuing operation. So you understood the question now. They have two models and the two products. One is commercial vehicles and one more is passenger cars. If you discontinue an operation, then discontinuing operations standard will be triggered. See, when they say discontinued, no, in discontinuing operations 24, you should have stopped it completely. You should have sold, you should have a plan to sell all the assets. Then only discontinuing operations can be triggered. Here what they are doing, no, they are telling, sir, I have a plan to discontinue this passenger car division after when? 5 years. 5 ವರ್ಷದಲ್ಲಿ ನಾನು discontinue ಮಾಡಬೇಕು. And 20% every year I am reducing the passenger car production by 2020. So in 5 years, 100% of the production will be gone. And the question is, over 5 years they are reducing, no? Is it amounting to discontinuing operation? Is the question. As per standard, all of you, answer. Is it discontinuing operation? Why? It's gradual phasing out, so it cannot be discontinuing operation. Discontinuing operation, it should stop now. Today, stop madi, resolution pass madi, should have made plan to sell the assets also. Production also, 100% it should stop today only, now only, and you should have committed for it. Decisions agbidbeku, completely should get over. Then only discontinuing operations can be triggered. If you are phasing it out for 5 years, have you stopped it? No, you are stopping it over 5 years. I thought maybe at the end of 5th year it will become discontinued operations, but right now it's not a discontinuing operation. So you should write no. One more question they have asked, try to answer. If the company passes a resolution to sell some of the assets in the passenger car division and also to transfer few other assets to passenger car, does this trigger application of AS24? And the resolution pass madidare. I will sell some of the assets of passenger car division and some other assets of passenger car division I'll transfer it to commercial vehicle division. Anta resolution pass madidare in the meeting. Will now AS24 be triggered? No, AS24 will not be triggered. See here, what is the resolution? I will sell the asset anta. Discontinuing operation is then I have stopped the operation anta. So other board meeting alli, if the resolution comes that we have stopped it and that's why we have to sell it, andidre I would have agreed. Here the resolution is just to sell, not to stop. So still AS24 cannot be triggered. Okay. Coming to the third point. Would your answer to the above be different if the company resolves to sell the assets of the passenger car division in a phased but time bound manner? Ega. See, see, also in the second sub question, they have told we'll sell the assets. When, yavaga, year, next year, adu irlilla. But illen heltidare, we have passed the resolution to sell the assets in a time bound manner. And within 2 years, I will sell all the assets of passenger car division. Or within the end of this year, I will sell all the assets. Iga? Yes. Correct, no? Because I have told, no? Time bound. I have a time bound. That is within this year, I will sell all the assets of the passenger. Andre, I am closing the operations. Third point will trigger the AS24 provisions. All of you got it? Second also, it was about selling the assets only. But did they tell the timing? 10 ವರ್ಷದಲ್ಲಿ ಬೇಕಾದ್ರೆ ಸೆಲ್ ಮಾಡ್ಬೋದು ಅವರು, 20 ವರ್ಷದಲ್ಲಿ ಸೆಲ್ ಮಾಡ್ಬೋದು, who knows? That is not immediate discontinuing operations. But in this, what they are doing, they are passing resolution to stop it within 1 year, maybe, time bound manner. So within 1 year, they will sell all the assets, operation will discontinue. So this will trigger AS24. This will trigger AS24. Okay. Now coming to AS28, impairment of assets. So if you remember, this exact question is there in our study material. You know, this guy has 150 magazine titles. The question, without even reading, I can tell. What was the question? Whether each magazine title can be considered as a separate CGU was the question. CGU andre no, cash generating unit. So let's read it fast. A publisher owns 150 magazine titles. 70 were purchased and 80 were self-created by him only. The price paid for purchased magazine title is an intangible asset. The cost of creating magazine titles and maintaining the existing titles are recognized as an expense. Cash inflows from direct sales and advertising are identifiable for each magazine title. Prati one magazine title in the what is the sales and what is the advertising income that the publisher is getting, we are able to identify. Titles are managed by customer segments, etc. Now let's come to the main point. Whether will it be considered as a cash generating unit? My question is, this guy publisher is there. Now, 150 magazine titles ಇದೆ. Magazine titles ಅಂದ್ರೆ ಏನು? You know, Tara, Taranga, Sudha, Shobha, Gruha Shobha, all that. All these are what? Magazine titles. Yes, so many. Can each magazine title be considered as a separate CGU? Is the question. What is the CGU first of all? It's a smallest identifiable group of assets which can give you largely independent cash flows. Aita? So simply if I have to tell, there are 150 magazine titles, no? If I separate one magazine title from 150, will this one magazine title be able to separately generate its own sales and revenue is my question. ಈಗ ಎಷ್ಟೊಂದಿದೆ, ಗೃಹ ಶೋಭಾ, ತಾರಾ, ತರಂಗ, ಎವ್ರಿಥಿಂಗ್, ಆಯ್ತಾ? ಇದರೆಲ್ಲ ಮಧ್ಯ I'll take only Tara. Okay, can I take only Tara and can I make money? Why not? If not, why tell me? Of course I can make money, no, separately. ಯಾರ್ಯಾರು ತಾರಾದಲ್ಲಿ ಅಡ್ವರ್ಟೈಸ್ಮೆಂಟ್ ಬೇಕು ಅಂತ ಅನ್ಕೊಂಡಿರ್ತಾರೆ, they will come to me and they will give me the revenue. Correct, no? There is no need for 150 magazine titles to work together, no? Aram se I can take out one. Will I still be able to generate that money whatever Tara used to generate separately also? Yes, then it is a CGU. Did you understand? So it's each magazine title is a separate CGU. Same question we have it in study material. So coming to AS29. So what is AS29? Your provisions. So let's read this question. Simple again. Galaxy Limited is in the process of finalization. They need your advice. Okay. Galaxy Limited is selling cosmetic products under its brand name Angel, but is getting these products manufactured from X Limited. I am selling it. Who is manufacturing it? X Limited. It is an understanding that the X Limited with X Limited that if the company becomes liable for any damage claims due to any injury or harm to the customer of the cosmetic products, 40% shall be reimbursed to it by X Limited. During the year 24-25, an estimate claim of 25 lakhs may be payable to the customers by Galaxy Limited. How should Galaxy Limited account for the claim that becomes payable? You understood the question, huh? I am selling this product called Angel, but who manufactures it? X Limited. So if tomorrow I will sell it to customers. Now if customer has any complaint with that product, okay, of course they will put a claim on me. Out of that whatever 100 rupees, say 100 rupees is the claim, out of that 40 rupees should be given by X because he is the manufacturer. 60 I should give. Ee tara namge ಎಷ್ಟು claim bandide? 25 lakhs. How to treat it? Is it a present obligation? Can it be a liability? Yes, no? because people will come and ask me only. So 25 lakhs is my liability. It's a present obligation, and it will, people have put a claim, we have agreed that we will give. Halwa? But out of 25 lakhs, entire 25 lakhs I should only pay. No, who will give? 40% X will give. So 25 into 40% comes to 10 lakhs. So 10 lakhs is a receivable from X Limited. For me, 25 lakhs is payable. So how much is my expense? 15 lakhs. Correct? That is how you will account for it. See, 10 lakhs is to be reimbursed by that guy. So I will recognize it as an asset. And we have a liability of 25 lakhs. Therefore, my expense or loss which goes to statement of P&L is 15 lakhs. Are we clear? Then what? We have one more question. Come to B. Galaxy Limited has been sued by one of its competitor for alleged infringement of trademark, and a notice for levy of penalty of 50 lakhs has been received by it. The company has appointed a law firm to defend its case for a fee of 5 lakhs. 60% of the fee has been paid in advance, and rest 40% would be paid after finalization. There are 70% chances that the penalty may not be imposed. Now my question is, they have put me where I am supposed to pay a penalty of 50 lakhs. So should I book it as a liability? Is the question. Why not? So what you have to understand, no? For something to be a liability, it should be a present obligation, and outflow should be probable. Remember, probable andre no, chances should be more than 90%. Probable andre more than 90%. Possible andre 50 to 90, not probable. Okay, probable means more than 90%. We have discussed this. So only if the cash flow is probable, you can recognize it as a liability. What is our chances of outflow? It is 70%. So is it probable? No, that means it is possible. More than 90 probable. 50 to 90 possible. If it is possible obligation, then we will call it as what? Contingent liability. So this 50 lakhs will be treated as contingent liability. So can you see here, in the given case, there are 70% chances that the penalty may not be levied. Accordingly, Galaxy Limited should not make provision for liability. The matter is disclosed as contingent liability. You cannot record it as a liability, just disclose it in notes to account. All of you? Yak na liability recognize modila, and for that there should be probable outflow. Is it probable? No, it is possible. But however, see, they told about the fees. 5 alli bari 60% matra pay madidini. So 5 lakhs into 60% andre 3 lakhs. Remaining 2 lakhs, whether I win or lose, am I supposed to pay it? 2 lakhs. Legal fees andre lawyer kodadu. Case gelli solely. No matter what, we have to pay the lawyer's fee, no? So that is a probable cash outflow. No doubt about it, correct? No? So for the remaining 40% which you have not paid, 5 lakh into 40%, 2 lakh. For that you have to make provision. That is a liability because the outflow is probable. But here, this outflow is not probable. Henceforth, I have classified it as a contingent liability. Understood? So let's come to question number 18. This is about your schedule 3. Again, there is no new thing here. If you know all the schedule 3 items, it is already what we have discussed in the class study material only. So let's see the information once and we will discuss the adjustments. First, authorized capital information they have given. Where will you put it? In notes to accounts it should come. Rent of 20,000 and wages of 1,56,500 are outstanding. What you have to do? Include them in P&L also and show a liability also. What liability? You will show current liability. Correct? Next. Provide depreciation. Please provide depreciation. Depreciation expense will go to P&L and it will also be reduced from the asset. Closing stock. Where will this go? This will go to balance sheet. Also it will be considered in P&L. Where? Changes in inventory. Remember, what is changes in inventory? Opening minus closing. Make a provision. Okay, whenever you make a provision, first thing you do is see whether we have existing provision. Do we have existing provision? Yeah, we already have existing provision of how much? 25,000. They want us to maintain provision at 5%. What is our debtors? Where is debtors? Here, 64 lakh 75. So what is 64 lakh 75,000 into 5%? 3 lakh 23,000. That is the provision I'm supposed to maintain, but I already have a provision of 25. That means I will increase my provision by how much? So I will increase my provision by 2 lakh. Correct. This 2,98,750 will go to P&L, because increase in provision will lead to an expense. Decrease in provision will lead to an credit side income. So since we are increasing it by 298,750, this will go to P&L, and your PDD balance will become 3,23,750. Clear? Next, this transfer of 1 lakh to general reserve. So what you have to do? From P&L, transfer 1 lakh to general reserve. P&L reserve, general reserve, two reserves will be there, no? Out of P&L, transfer 1 lakh to GR. Make a provision of 25% for corporate income tax. So what is the entry for making provision for income tax? It's income tax expense account debit to provision for taxation. Income tax expense is an expense increasing debit, and provision is a liability increasing credit. So provision will go to liability, income tax expense will go to P&L. On what amount will you calculate this 25%? You will prepare P&L, no, in schedule 3. P&L profit in mandiratalla, on that you will calculate 25%. Same question we have. Next, term loan from public sector bank is secured against hypothecation of plant and machinery, and installment of term loan falling due within 1 year is 17 lakhs. How will you show this? See, if it is a loan from public sector bank, you have to disclose it separately as per schedule 3. And if it is hypothecated, and if it is secured loans you have to disclose separately, and also you have to tell it is secured against what anta. It is secured against what? It's secured against plant and machinery. That also you'll give. And what will you do for this installment of term loan falling due within 1 year? It is long-term loan only, but current maturities of long-term loan will come where? As per schedule 3. Current maturities of long-term loan will come under short-term borrowings. Correct? And if the loan is 5 years, okay, whatever you will pay now, first installment, now, that is payable within 12 months, no? So current maturities of long-term borrowings, it will be classified under short-term borrowings. Remaining loan will be classified under long-term borrowings. Trade receivables of 85,600 are outstanding for more than 6 months. You know, no? For debtors will give aging. Less than 6 months, 6 to 3, 1 year, all that aging will give, no? For that they have given. The board has declared a dividend at 10% on paid up share capital. What to do? We have very clearly learnt in which standard? AS4 or AS5? Yeah, AS4. We have very clearly learnt. Correct? If the dividend is declared after the balance sheet date, then even it has happened before signing off financial statements, it cannot be treated as adjusting event. You cannot record it. It's upfront, rejected by AS4. Right? So that you have to not do anything in the financial statements, but in the end of the question, you have to write a note saying that as per AS4, we cannot record this dividend. We cannot adjust this dividend in the financial statements as per AS4, because though it is declared before Board of Directors approving the financial statements. Okay. Coming to internal reconstruction. So again, this is a ditto same question from study material which we have discussed in our classes. Okay, internal reconstruction also, and this branch account also. So you remember this branch, what they have asked? It's foreign branches. Correct? Remember how we do foreign branch? Integral foreign operations, non-integral foreign operations. Correct? Tell me whether it's integral or non-integral. That they should have given. They have given, they have not given. Okay. Following is the trial balance of the Cambridge branch of Harry Limited. That means our head office is there in India, our branch is there in foreign. It's a foreign branch. See, the currency is given in what? Euro. In the books of head office, the branch account is stood as under. They have told that goods are sent to branch at cost plus 10%, and branch sells the goods at invoice price plus 25. Sir, what is invoice price? Invoice price is only cost plus 10. And selling price is invoice price plus 25%. Furniture was acquired on 1st April when 1 euro was 84 rupees. The branch manager is entitled to a commission of 10%. Rates of exchange they have given. Please prepare branch trading and P&L. To prepare branch trading and P&L, we need what? Trial balance. We need trial balance in which currency? In head office's currency. What is head office's currency? It's rupees. So you have to convert it into rupees. Okay. So I'll assume, if nothing is told, I'll assume it to be a, which it is integral foreign operation or non-integral foreign operation. See, first of all, it is foreign branch now. Foreign branch anta bandre, it is already independent. Technically they should have given, it is non-integral, but however, we'll see what they have done here. I feel the moment it becomes foreign, it is non-integral anta, but again, you cannot do that assumption also. So they have treated it as integral foreign operation only. Okay. So they have treated it as integral FO. So if it is integral foreign operation, how will you convert this trial balance into rupees trial balance? Remember, if it is integral foreign operation, if it is monetary items, we use closing rate. If it is non-monetary items, we will use historic rate. Remember, AS11. Of course, correct, no? So, if it is integral foreign operations, for monetary items we'll use closing rate. For non-monetary items we'll use historic rate. Income and expenses, we are supposed to use that day's rate only, but if that day's rate is not possible, we will use average rate. Now come on. Now that I have already told the rules, it's integral foreign operation, monetary asset adre closing rate, non-monetary asset adre historic rate. So first of all, furniture is what? Monetary asset, non-monetary asset. It's a non-monetary asset. Monetary and then it should be receivable or payable in terms of money. Furniture is receivable and payable in terms of money. No, non-monetary. So which rate to take? Historic rate. Historic rate and the rate that was existing on the date of transaction. Have they given that? Yes, no, they have given. It was purchased on 1st April and that day the rate was 84. So I will use 84. Next, stock, opening stock, monetary or non-monetary? Technically stock is non-monetary only. But it is very difficult to find out historic rate. So if you are not able to find out historic rate for stock, then you can use the closing rate itself, is what we have learnt. Now opening stock, we have to use opening rate, and for closing stock we have to use closing rate. So opening stock, opening rate no. See, on 1st January the rate is 91. So opening stock will be converted at opening rate 91. I know we are supposed to use historic rate for non-monetary, but stock is an exception, remember? Stock on the K you can use opening or closing rate. Debtors is a monetary item, we will use closing rate. What is closing rate? It is 89. So debtors I will use 89. Cash at bank is a monetary item, I will use 89. Head office, which rate? No need to use any rate, because the head office balance here will be equal to the branch balance in head office books. Have they given the branch balance in head office books? Yes. See, the branch balance in head office book is 61. Andre, no need to convert this only, no. Directly take it as 61 lakhs. Alva? Because we know that head office account in branch books and branch account in head office books is same. Then creditors is a monetary item, so I will use 89. Sales is what? Is an income, I will use average rate. So what is an average rate here? It is 86. So sales, I will use 86. Expenses also I will use average rate 86. Goods sent from head office. Again, whatever is goods sent from head office will be equal to goods sent to branch in the books of head office. No. What is the goods sent to branch? It's 180. That means whatever is received by branch is whatever is sent by HO. Don't you think then this 12,000 is nothing but this 180? Alva. So we will take it directly at 180. We will not convert it because goods received by HO in our books is equal to goods sent to branch in HO books. Adhe number na tagotevi. We will not convert it. Are you getting it, all of you? So using this, I will convert it into a rupees trial balance. Understood? So with that, we have discussed May 2026 RTP. I hope it has added some value to it. Okay. So with that said, I also request for your upcoming examinations, please solve other RTPs also. And very soon we'll be coming up with our marathon revision video also in the same channel. So stay tuned for that video as well. Until then, all the best. Bye. See you in the next video.